Hey, good morning, everyone. Hi, David. John Nyaradi here. Good morning, everyone. Thanks for joining us. These are always great presentations, and David's a longtime friend and collaborator of mine, and looking forward to talking with you today. I'm John Nyaradi from TradingGods.net, and we're going to talk about cannabis and commodities and selling their options for income. That's what we do, is sell options primarily, and so that's what we're going to talk about. And we are active in both commodities and the cannabis world. We always start these with a disclaimer. You've seen these before, of course, in other webinars. So it's informational and educational purposes only. It's not investment advice. We think everything here is accurate, but we don't guarantee that. And we don't represent that you're going to achieve any profits or losses similar to what we may talk about here. Always consult with the financial advisor. And you can see all our disclaimers at the TradingGods.net website. Since we do options 100%, this U.S. government required disclaimer is quite important. The characteristics and risks of standardized option trading. You can check that out at the link or at the Options Clearing Corporation. Main thing to understand here is that stocks, forex, and futures option trading is not appropriate for everyone. Of course, that's obvious. There is substantial risk of loss associated. Losses can and will occur. We do have losses, but we work to make sure that we work our hardest to have positive outcomes, and the gains outnumber the losses. But no system or methodologies have been developed that can guarantee profits or ensure freedom from losses. That includes the system. And again, check out the disclaimer at your leisure. So this is me. I'm John. I'm the publisher at TradingGods.net. I'm the author of a book called Super Sectors. It's published by John Wiley and Sons, How to Outsmart the Market Using Sector Rotation. It was fun to write, and I think helped people along. Did a great job. I've published all over the internet, all these different places: MarketWatch, Seeking Alpha, Yahoo, USA. I've been on several of the business news talk shows. Used to have a column at MarketWatch as well as USA Today. I have a master's in management from Michigan State. Been trading a long time. And I like trading, and trading, I think, is an important part of everybody's repertoire. You know, you can be an investor, you can be a trader. It's important to have different strategies as well as different asset classes. You've heard about diversification, and I think that also is important in what you do and how you do things. So we're going to talk about the best commodity options, the best cannabis options. We're going to talk a little about VIX options, which don't really fall into that category, but they all are. VIX is an alternative asset class. We have a VIX trader program, so I just wanted to introduce that to you. VIX is where the professionals hang out, and it's just worth learning about that. So we're going to talk about how to buy and sell these things. And so our main strategies are selling and buying. So again, diversification of strategies and outcomes. So we call our blue ocean strategy is our selling strategy, and in that we do vertical credit spreads and iron condors. And then we have a cat shot strategy, which is a buying option strategy, which we use debit spreads for. So we're going to talk about both of those and how they fit together into a complete package. So what are the best commodity options to sell? I mean, there are a ton of them out there, right? But the ones we focus on and that we trade actively are primarily gold, silver, USO, and UNG. So gold, and we spend most of our time in gold and USO. We like those a lot. Silver is fine. UNG is natural gas. That one can blow you up if you're not careful. There have been several dramatic meltdowns when people trade, particularly UNG futures naked. And so we don't do that. We don't do anything naked in terms of naked puts. Everything is a credit spread or a debit spread. But so our main focus is gold and USO. We currently have positions on in both of those. They are iron condors and vertical credit spreads. The cool thing about these is that they're listed on regulated exchanges. So it's just like a stock, really. They're highly liquid, tight bid-ask spreads, so they're easy to make good trades and not get killed by the market makers. and you can trade them in any kind of a securities account, either a brokerage or an IRA. And I like the IRA factor because I use these in my IRA. IRAs, of course, are where most people have their wealth. And the cool thing is with these options that it gives you the opportunity to go long and short inside an IRA, which you normally can't do with stocks, of course. And again, they're liquid. And when you sell options, you're looking for high volatility because options pricing is a little weird. As you know, it's whoever invented those Black-Scholes, I guess, were the guys. They were mathematical geniuses, and it's almost set up to inflict the most pain on everybody. But if you can figure it out, then you can sell these high volatility options and that are overpriced, which automatically gives you an advantage. And then when you buy options, you want to think about buying low volatility options because they're fairly priced or maybe even underpriced. So these commodity options offer some terrific opportunities. We do them on a regular basis, gold and USO especially. And so something to put in your repertoire. And of course, you can also trade these as vertical debit spreads, directionally. Again, for the same reason, they're highly liquid. And you can also do the ETFs. I mean, these are all widely traded, exchange traded funds, tons of volume. So you can do ETFs. And they also have leveraged ETFs, 2x and I think even maybe 3x. So lots of opportunity in these four issues if you want to buy or sell either commodity options or the underlying ETF. So those would be the ones I would suggest that you dive into and get a good understanding of. Cannabis is a new thing. It's pretty exciting, really. It's really taken off, and you can see how it's going mainstream. It's I just have to kind of laugh in a way or sarcastically because if you think about all those years of the war against drugs and just say no, and whatever your views are on if it should be legal or not, it is in many states, and I think it's on its way to becoming legal nationally. It's already legal nationally in Canada, and so in my view, we spend a lot of money in tax dollars, like prohibition, chasing around, something that now has become legal. But the fact that it is legal and going mainstream is huge for traders. I was reading, prepping for this presentation, Marlboro is into it, some of the big tobacco companies, most of these companies are Canadian. There's an advisor share ETF called YOLO that works with commodities or cannabis. So, I mean, this is here to stay, and so let's take advantage of it as traders. I think that would be the approach to take. And so if you're selling options or buying options, either one, you need to find options that are liquid, deep, and that have good premiums. And so there are a ton of options companies out there. I mean, you've heard all of them, ACB, STL, MSRs, QR, CURA, and so on. But the big ones for options that have sufficient volume and pricing that are attractive is either a buyer or a seller or listed here. So I think these are all Canadian companies, IIPR, APHA, and TLRA. And I think Tilray and Aphria are actually going to merge, or one's buying the other. So, but these are the big three in terms of if you want to do options on these, that this would be the place to look. Tilray is number 8 today on Wall Street Bets. You've heard about that website, the Reddit crowd that moves markets, and so there's a website out that actually tracks on real time what are the hot ones. And at this moment today, Tilray is number 8 on that list. So again, just like the commodities, they're listed on the regular exchanges. They can be traded in security accounts. You can use them for risk management or speculation. high risk, and they're liquid and highly volatile. So a lot of opportunities here in both the commodity and in the cannabis world. So let's talk about VIX. VIX is a little bit off the wall. People, this is where the pros hang out, as I said. But it is tradable and it has options and it has opportunities in futures to trade it. And so what this is, and it's just good to pay attention to VIX. VIX is one of my indicators that I watch all the time because it's volatility. And of course, volatility is important to have a handle on in terms of what's going on. So it shows the market's expectation of the 30-day volatility going forward. And as I mentioned, these are like the real pros that watch this thing and use this. It's a minute-by-minute updated snapshot of what they think the S&P 500 is going to do in the next 30 days. Been around a long time, more than 20 years, a couple of different versions. And it's known as the fear index because as S&P goes up, VIX goes down, S&P goes down, VIX goes up. So it gives you some trading opportunities. And some people say it's predictive. And I think it may be predictive by a day or two. And then many other people say it's reactive. But it's widely watched and traded. And this is a new asset class you can use for directional trading, diversification, hedging, and then option trading, which we're talking about here today. So this is what VIX looks like over a bunch of years. It's a 0 to 100 scale. And you can see it's mean reverting, how it goes up and down, up and down, up and down. So it's tough to trend follow this thing, but you can, get into moves as they happen. Yeah, long-term average has been historically around 20 to 25. Lately, it's been lower than that, largely due to the Federal Reserve and their intervention, let's say, in the markets and the quantitative easing and tapering and all those things. So it's you can see that 08, 09, it was almost at 100. That was its high point. And today we're back in the teens. So lots of ETNs to trade here, and there's a whole list of them. You can go long or short volatility. And we have this program I mentioned to you that teaches you how to do this both in ETNs and in option trading. The VXX, the first one there, is the most popular by far. It mimics VIX volatility, so it's actually the first couple months of future contracts. And it's an interesting ETF. You can catch little short-term moves, but it pretty much, if you look at a chart of VXX, it pretty much is in constant decline and decay, and every few years they have to do a reverse split on it. So if you're a courageous soul, you could short VXX, and if you can withstand the pops that happen, there's no sure bet in trading, but a short VXX trade is one of the surest. Let's just put it that way. But you got to know what you're doing here. So read about contango. That's a little bit too complicated for today's presentation. Contango and backwardation. So check out the prospectuses. The main providers are iPath, ProShares, and Velocity shares. But again, deeply traded, deep volume, and lots of opportunity for as traders. We need to have things moving, and VIX will certainly do that. You can also trade futures on VIX if there are any future traders in the house today. Just like any other futures index, it's like the E-minis or the anything else like that. The options we talked about, they've been around a long time, and then you have ETNs. So 3 different ways to do this. And again, lots of opportunities there in both up and down markets. So you can see going back 15 years or so what this thing looks like. And typically, as you can see, it's in a downtrend almost all the time or flat, because in these last few years, since the financial crisis there in 08, markets have been quiet and stocks have been going up, probably the biggest bull market in history. So, but being mean reverting, you can always find opportunities in up and down markets. So here's VIX compared to the S&P 500. VIX is the candlestick, and the S&P is the gray line there. You can see how it moves opposite. It's just a mirror image of each other. And as I mentioned, some technicians use VIX as predictive, others say it's reactive, and there's even a VIX of VIX, which is interesting. We follow that one a little bit, which tries to look ahead to see what might be coming next. So let's talk about some trading strategies. These slides are titled VIX Trading Strategies, but these work for anything, and they're real simple that you could start using today, and they're available at any charting service for free. So these are from StockCharts.com. Great website, by the way. I'm not a salesperson for them, but they've got a great chart school if you just want to go and learn some free stuff. It's a great place to do it. And so we'll talk a little about RSI. That's commonly known indicator. And what we're looking at here is up at the top there, you see the RSI. It's between 30 and 70 is where RSI lives. 70 being overbought and 30 being oversold. And it's quite predictable that when VIX or when RSI is overbought, and this is true of everything, not just VIX, that it will eventually revert back towards the mean. And you can see how that does that with the green circles and then the lines correspondingly. So every time, or oftentimes, most times when RSI hits 70, it'll be a mean reversion in the underlying asset, whatever that is. This is VIX here, but it can be anything. And then you'll have a decline. So that's a pretty solid trading platform for a mean reversion kind of trade. You can trend follow, or you can do mean reversion, a couple of different concepts. So this one is pretty solid, and you could do that starting today for free, and it's really easy to understand. Here's a variation of that. This is the 2-period RSI. This was developed by a gentleman named, I think, Larry Connors, who had a big website. I'm not sure what he's doing now, but same concept, but on a 2-period. That previous chart was 14-day, and that's the standard. So this one, you shorten it up to 2 periods. So if you're a shorter-term trader, same idea though. If it's overbought, it's going to revert to mean. If it's oversold, it's going to climb. And this is obviously much more active. If you look at this, we have a period here of just a couple months, and you've got several trades going on. But again, if you want to be a short-term trader and take some scalping opportunities, certainly this 2-period RSI is a great way to go. Number 3 here is point and figure charting. Now this one is just hardly known anymore at all, but I always like things that are off the beaten track, out of the mainstream. So this was around when Charles Dow was around. In fact, he used this way before the age of computers. There's a big section on this in StockCharts.com if you want to get into this in a deeper way. And there are a couple of really good books on point and figure charting. I don't think it's used too much these days, but let's take a look at what this does and what it does for you. And basically, it takes out all the noise. The problem with being a technical trader is that you can just do so much and get so many things going. Finally, they call it analysis paralysis. You can't do anything. You're just frozen. And this chart just takes all that away. And you can imagine what it was like drawing these by hand every day. But now, of course, your computer will do it for you. So all this shows is supply and demand. Column of X's is demand is in charge. Column of O's, supply is in charge. And up there at the top, it'll give you a bullish price objective, what the most recent signal is. And the red and blue lines are more like longer term trend lines for longer term traders. So this thing is cool, and it's worth at least checking out and seeing if it makes sense for you, because anytime you're doing something that nobody else does, you have an edge, because you got to figure Depending what stats you read, 80, 90, 99% of traders fail. So you don't want to be in that group. You want to be in the 10% that succeeds. And to be in the 10% that succeeds, you have to do what everybody else is not doing. And this is one example of that. And MACD, everybody knows about MACD, right? But it's cool. It works. It's a good momentum indicator, real solid. You can use it with divergences. You can use it just as a trend following thing. Like any of these things, it's not foolproof. You need to have other indicators along with it. MACD will lag a little bit, but since everybody watches it, it's really good to know what the crowds are doing, right? Because you can just follow the elephants that way and use this as a pro would rather than as an amateur would. And then our final system we're going to look at here is this called the Ichimoku cloud. Now this one is really cool. Very rarely used except in Forex trading. The Forex traders seem to like this one a lot. But basically, you've got some lines and this cloud. So if the price is above the cloud, it's bullish. If it's below the cloud, it's bearish. And then these lines give you some shorter term trades up and down. There's a blue line, fast line, slow line. So depending what kind of trader are you, you can go fast, slow. You can do the green line, which is kind of lagging. That's more of, like I say, a 200-day moving average. And then the cloud itself. What makes this different is if you look where price stops there, it's about in February. But the cloud keeps moving ahead. The cloud is ahead of that. And it will actually forecast what's going to happen. It's the only one of these indicators I've seen anywhere that will look ahead in a way and tell you what to expect over the next about 30 days. So in this picture, it's a blue cloud, rising cloud. It's on a buy signal and expects that going forward. We've been in a green cloud, or depending which type system you use, it's either green or blue. The ones I use are green. So we've been in a green cloud for a long time. And it just recently went to red during this big sell-off here, the last, since early September. And it's going to be interesting to see, everything, of course, is rallying hard today. So it's going to be interesting to see where this goes next. Is the cloud going to turn back to green or not? But as of yesterday, it was predicting lower prices ahead. Again, lots of books out on this, lots of stuff on the web that's free. Check it out. Lots of stuff in stock charts. Just another tool in your arsenal. I use this one every week. It's not my main indicator, but I do use it just particularly for that forward-looking cloud. So let's talk about selling options, because you can buy options and you can sell options. Sellers have a massive advantage, and we do a lot more selling than we do buying. And we're going to spend the next few minutes talking about why. So here are some of the benefits. You get paid up front with the premium. When you sell an option, the premium goes right into your account. And that's your profit. You keep that premium if the option expires out of the money. Most do, between 70 and 80%. The other big advantage of option selling is time decay. It's called theta. We'll talk about it in a minute. But time is your enemy if you are an option buyer. Every day that passes, that option decays a little bit, it melts. And so as a seller, time is your friend. Every day that passes, your value goes up and the buyer's goes down. So that gives you a huge edge right away, just a built-in edge as an option seller compared to being an option buyer. Here are all your advantages. Cash flow, high returns are pretty low risk strategies, not no risk. You can generate income from your computer, you can compound profits. You have really great control over these things. You know exactly what your risk is going in. You get a credit, you know exactly what your profit is going to be, and you know exactly what your risk is if the world blows up. So there aren't too many ways to trade that give you that kind of certainty going into the trade. And of course, the key is to manage that and make sure that you're not taking on too much risk and that you have the odds on your side, because you need to have an edge. If you do not have an edge, you're going to lose money. That is a certainty. And again, you can use these in self-directed IRA accounts. We don't do naked selling, as I mentioned. We do spreads, and TD Ameritrade, Schwab, all the Tasty Trade, all the big houses allow you to do these spreads. Credit spreads are called, or iron condors in IRA accounts. And you can short the market. You know, you can have a bear call if you think the market's going to go down. So the disadvantage of being a seller, because there's no perfect strategy or no perfect trade. Limited reward, all you get is that premium. There is some risk. If things blow up, the risk outweighs the reward. So it's a lot of people look at this and go, hey, that doesn't make much sense, taking a huge amount of risk for a relatively small return. But you trade, it's always a trade-off, right? So you're trading that for the consistency and the probabilities being in your favor. And you got to know what you're doing, because the average option trader will just buy a call or a put, and that's basically just throwing money away. And so there is a learning curve here, because if you do it right, the money in that little graph there goes from the buyer to the seller. And that's, of course, you want to be where the money's going. So we talked about theta. The Greeks, everybody gets tied up in the Greeks and option trading. Just don't do that. You don't have to do that. There are only two Greeks that matter. Theta is this one, and the other one is delta. So theta, let's talk about it. That's the measures the rate of time decay. As I mentioned, every day, those options decay. They decline in value, the erosion of premium over time. So that's why if you're a buyer, something's got to happen quick, because if it doesn't, your option is like that ice cube. It's just going to melt away. And if you look at the hourglass, every day the money goes from the buyer's account to the seller's account. So you have to understand theta. Not hard to understand, real simple concept, but you need to consider it. And what that adds up to for us is there are all kinds of studies on this, but somewhere around 70 to 80% of all options expire worthless. So you can see as a seller, you have a built-in 70 to 80% advantage. And if you apply some just basic trend following and some money management, risk management, it gives you that edge that you need to be successful. So what do we do? How do we do this? One thing is vertical credit spreads. Again, go to Investopedia. There are tons of information out there about vertical credit spreads. But basically, you're selling an option and you're buying another one, and the one you're selling is closer to the what's called at the money, where the underlying is. So that one's more expensive. You're selling a more expensive one, buying a cheaper one, and then you get a credit in between. That's a vertical credit spread. Pretty simple. And here are some of the characteristics of that position. And we do these all the time. You can do them. You can do them as a day trader. We do that. We can do them weekly. We do that. We can do them farther out in time. We do that. So hugely versatile product. And their characteristics are like we've been talking about: limited risk, limited reward, high probability, consistent income. And consistent is the key, because you can hit a home run if you're on AMC or one of those highly shorted stocks or whatever crazy things. But those are low probability trades. These are the opposite. These are singles and doubles. It's not a grand slam. We put time decay in your favor, and we become the house for the insurance company. This is a key point. Warren Buffett does these all the time. He sells SPX puts way out in time and just holds on to them. He pockets billions, millions, whatever. Then that money is there you can use to buy other things. And then over time, he's convinced, and he's actually, of course, correct. Over a long enough time period, markets go up a large percentage of the time. They're in an uptrend much more regularly than they are in downtrends. So He's an insurance company, and so are we. So we'll sell portfolio insurance all the time on the SPX and all these different things. And we can also consider ourselves, if the options market or casino, then we are the house. And both the insurance company and the house have a slight statistical advantage. When you go to Vegas, we'll look at a picture here in a minute. That blackjack dealer has a slight edge, or that roulette, what do they call him, croupier, the guy who spins the wheel. He has a mathematical advantage over you. If you play long enough, you will lose all your money. Insurance companies are smart too. You know, think about it. You have a house, you pay insurance on it. You have a car, you pay insurance on it. Put insurance on your life. So these guys are smart. They have actuarial tables. They know what's going on. And they know that over time, they will collect more premiums than they pay out in claims. And so that's the same thing that we're looking for here in this kind of trading. But again, as always, I just can't emphasize this enough. Limited risk doesn't mean no risk in any kind of trading you do. Futures, ETFs, stocks, day trading, whatever. Start out and focus on not losing money. You know, it's kind of the old Warren Buffett rule. Rule number one, don't lose money. Rule number two, don't forget rule number one. That really is true. So amateurs will look at how much you can make, and a pro will always start out in a trade and say, how much can I lose? And can I stand that loss? You know, can I withstand that? Because if you don't think that way, inevitably you're going to blow yourself up sometime. And, you know, people do that all the time, more than once. So that's vertical credit spreads. So we're selling options with these characteristics. I mentioned high volatility because they're overpriced, short time because the theta, as you get closer to expiration, the theta increases, the rate of decay increases. And it's really exponential, but starting at about 60 days out from expiration, then the decay increases, and then 30 it gets more, and then towards the end it's really exponential time decay, which is good for you as a seller. And then we look for low to medium delta. Delta gives us high pop, which is probability of profit. So we start out with usually at least an 80% probability of profit. So that would be a 20 delta. And those are easy to find on any kind of options, trading matrix. You'll see that, and you can learn that and learn how to use that. And of course, that's the starting point, and things change. And the more time you have in there before expiration, the more things are going to change. So you have to manage those things to keep the delta in your favor. We talked about cannabis commodities. We also do SPX. That's the cash SPX. It's a great vehicle to trade. It's, again, where the pros hang out. If you have a smaller account, you can do SPY, but we like SPX a lot. FANGs are famous, of course. Cool thing about the SPX and SPY and the Qs, they expire Monday, Wednesday, Friday. And so you get a lot of trading opportunities. Most of the ETFs expire only on Friday. And we mentioned about the IRA accounts previously. So we start out, when we set these things up, we look for somewhere between 80 and 95% probability of success. We never go below 80 on the setup. And 1 to 30 day trades, it says here, so that's our duration. We'll sometimes go out to 45 days. But you want to be in that zone where the the theta is really at work. And the cool thing about this is, unlike any other kind of trading that I know of, you don't have to be right about the market direction, where in most cases you do. So here you can profit if they go up, if they go down, if they stay sideways. If they move against you, you can even profit as long as it doesn't move against you too much. And then there are ways to manage that if it does, to mitigate risk, limit risk, and we do that all the time. You have to actively manage these. But the bottom line here is you don't have to, it's really tough to figure out to be right about directions. That's what makes buying options so tough. if you look at what happened, in fact, this happened to me the last couple of days here, a couple of weeks. We had a put option on the Qs, doing great, making good money. Everything was in a downtrend. And then wham, today, boom, it gets going vertical. And now all of a sudden it flips back over to a buy. So those are not going to be probably a successful trade, that directional trade. It might be because it's not, the jury's still out. Before I came on here, the Qs were just approaching their 21-day moving average exponential from below. So if it doesn't break through there, then this is not a sustainable rally. If it does though, then that's a different story. But bottom line is, you don't have to be right about direction. If you're a seller, it doesn't matter if it goes up and down. In fact, that's to your advantage if you have an iron condor going on, which we will talk about next. Best trade there is for a small guy or lady or gentleman, small trader, any kind of trader. This iron condor is just a great trade. And if you want to be successful, it's important to learn how to use this if you want to be a successful options trader. It's our second major strategy. The one was the vertical credit spreads we talked about. And this iron condor is basically just two credit spreads. It's a call and a put at the same time. Creates that little graph there. And so if price stays within those two wings, you keep all the premium. And if it goes outside or moves towards one of those wings, then you have to do something about it, because then you start losing on that side that's under pressure that gets attacked. Happens all the time, but it's easy to manage, and you got to be aware of what's going on. But if you manage those correctly, the big benefit to an iron condor is that it's basically a 2-for-1. They just charge you one margin. You can see how those arrows at the bottom there are flat. You only get charged one margin because they know you can only lose one side of it at a time. So basically you can double your potential return on investment, return on risk, return on margin with an iron condor. So if you want to be an option trader, learn how to do this. It's a really key weapon. So you add this all up, here's our formula for success. We look for this underlying with high volatility, so we get the high premium. Got to have high liquidity, good bid-ask spreads. The holding period, 5 to 30 days for that optimum time decay. We still use the trend. The trend is your friend, but it's backwards from most trend following systems. You want to sell away from the trend. Makes sense, right? You got to know what the short-term momentum is. You can diversify in all kinds of different ways, with time, with calls, with puts, and we do different assets. And so you have a real diversification of strategy and assets and uncorrelated assets. So a lot of times traders you have 10 different trades on, but it's really all just one trade. It's the same trade. Because if you're long Google and Amazon and Apple and Tesla, that's the same trade, even though it's a different stock. And then finally, you got to manage these things, control your losses, maximize your profits. We manage these every day. You roll up, you roll down, you roll out. So there are different ways to do this, and this really comes down to a bigger picture, like about your own lifestyle and how you like to trade. And so if you're working a job, there are some strategies that are appropriate for you. If you're at home all day, there are some strategies that are appropriate for you. But whatever your personal situation is, you can be a successful options trader and seller. Here's what Netflix looks like going along. Pretty cool. You can see what's happening there. So if you want to sell a Netflix option, here it is. And that works out to about a 6-day trade. And works out to 2.8% return in 6 days, 170% a year. And we started that out with a 93.5% probability of profit. You can see what bugs people is you have a max profit of 150. You could lose 48.50, but that would be only a black swan kind of event. So people don't like that risk reward ratio, but you have to kind of look through that and say, okay, we can manage that unless the world just blows up for Netflix overnight. to get to 48.50 would be an unusual event. Can happen though. And so if you can't handle 48.50, trade fewer contracts. Here's what it looks like, think or swim on the probability chart. You can see down at the bottom there, 93.5% percentage of winning. So that's cool. I'll take those all day, you know, and because what we do basically is we sell options to gamblers. The average option trader buys a far out of the money call or put because it's cheap, hoping for a home run, a big win. And of course, what happens is it decays away and they lose their money almost all the time. So we'll sell those options all day. You know, we can sell lottery tickets all day. And this is how this works. Here's another quick example in SPY. Same thing, 6.6% return 2 days. And exact same kind of thing. This is a 2-day trade, SPY put credit spread. So can you buy options? That's what everybody likes to do, right? You can do it, but it's tough. I'm telling you. Even if you know what you're doing, it's tough. Because here's what happens. If you want to buy options, you can, but you can't do it the way that most people do it. Because as we talked about a moment ago, most people lose money at this. So you don't want to be in that crowd. You want to do something different. Have you done this? Bought a cheap far out of the money option, hoping for a slam? Yeah, I've done it, but don't. I can't tell you don't. I can't give advice. I would suggest that I'm not going to do it because you're gambling. You're hoping for that grand slam. So what we do instead is we buy in the money options because they have some intrinsic value. And we look for things that are going to move that have a high probability of a short-term catch shot. And there are some indicators that'll tell you that. That's what's happening on Wall Street bets. Everybody's, in fact, some people are saying even the SEC is investigating that they're actually moving markets, you know, as a group, you know. It's possible, I don't know. But if you buy it in the money option and it moves, that's a real possibility of a good outcome. It's like a super trend following system. We usually buy the Qs because that's what we do. We like them. They trend pretty predictably, except like today. You know, there's nothing certain. But you do have an edge that way. And we also look for high volatility stocks. A lot of scanners out there. Check them out. You have to have some velocity to succeed as a buyer. So that's why people are doing the Reddit thing. That's why they're doing the most shorted. The FANGs are great. But time is not your friend. You have to remember that. Something has to happen soon. And it has to be price direction and time. And that's where you have the benefit of the seller. None of those things have to happen to be successful. And so I can't say again, if you want to buy a lottery ticket, go for it. I'm not going to buy a lottery ticket. Instead, I'm going to put the odds in my favor to get an edge. And again, I sound like a broken record here. You have to limit risk. Just mandatory for success. So how do you do that? The secret to buying options is there is no secret. We do debit spreads. We buy deep in the money options. We sell an out of the money option, which reduces your risk dramatically. And then we roll them up or down as the trend moves. And then you have to limit your losses to some predetermined amount of your account size. And if you do those 4 things, that puts the odds in your favor as an option buyer versus all the people who aren't doing those 4 things. So some of the best ones here are listed. You know, there's all famous names. And they do give you some advantages by doing it this way. So let's talk about futures trading. There are a lot of futures traders I know on this thing yesterday and today. And I haven't done futures trading yet. I've tried day trading. I found it to be very, very difficult, very tough to succeed. And you got to be there all day. You're sort of strapped to your computer. But there are some opportunities there, no doubt. And they have these new, relatively new. They started out with big contracts and they went to minis. Now they've got these micros, and I'm sure people are going to talk about that. The people that you're going to hear in the next yesterday and today. But these micro features are cool. They can get in as a little guy. They have in lots of different classes. You can get uncorrelated asset classes, diversification. You can do portfolio protection. So I've done some futures trading, but I hold the positions overnight, and that's a little. I find that hard to sleep because if there's a big move overnight, theoretically your risk is unlimited there. So it's just something to think about. And if you can be a day trader, God bless you. I wish you all the best. And I know, David has some really great people in his stable of friends and associates. And I'm sure there are some people that you're going to hear today or yesterday and today who can help you be successful doing that. So debit spreads. Just touch on this briefly. But if you buy a call or 10 calls in the SPY there, as we have listed, that's $18.47 or $18,000. So that's a big chunk of cash, and that is your entire risk. If there's a 9/11 event tomorrow, that call or those calls will be worthless. End of story. So that's a little bit too much risk, even if you do one. But if you match it up with selling one, you can drop it to 765 debit, a whole different deal, less than half the risk. People say, well, if you do that, then our profits are limited. True, but your risk is so far reduced, it just puts the edge on your side. It gives you a real edge. And so what happens? You're only limited, let's say it goes to 412 in this example, then you're maxed out on that trade. But so what? You just close that one and roll it up and do a new one if the trend is continuing. So this is, quote, the secret to buying options. So here's what we do. I love this picture. Friday payday. We talked about options expiring on Friday, and we look for that quite a bit. We don't trade on Monday at all. And we do Tuesday, we do a couple of 2 days, we do some longer weekly ones, we do iron condors between 5 and 30 days out. We don't trade Monday because if you look at stock market history, most crashes and black swan events happen on Monday or Tuesday morning. So we don't do anything until Tuesday afternoon. And then we trade the rest of the week. And it can be all kinds of different things, condors, cat shots, and then we manage them like with this big move today. Later today, we'll be rolling up, rolling down. You can increase your profits, limit your risk. We'll take profits early if we do sometimes. So that we said if time remains, we'll roll out in time. So the things about options is you have options to be punny, but it gives you a lot of options to actively manage and put the odds in your favor. You just don't have to sit there and get run over by a freight train. And we call ourselves retirement day traders. So let's talk about retirement planning. Whether you're young, old, in between, working, retirement's a tough gig. You're supposed to save $1 million. Not many people are able to do that. If you do, you're supposed to withdraw 3 to 4% a year. So you're making 30 to 40,000 a year. That's pretty skinny. You can make that in a week trading options with just a small portion of your portfolio. So here again, I apologize. Here are the options. If you're retired, you can supplement your retirement income. If you want to retire early, if you're tired of being a wage slave, going to the same toxic office with the same toxic people every day and doing your same toxic job, you can get out of that. And you can supplement your retirement income with just a small portion of that portfolio. So a lot of people want to retire early because they're tired of working for the man, and there's this FIRE movement, financial independence, retire early. So that's dependent upon basically starving, saving a ton of money, accelerating what would be a lifetime of savings into a few years. That's a tough gig too, especially if you have kids, want to buy a house, send your kids to college, take a couple of vacations. So we advocate fat FIRE, and this is how you do it. instead of trying to stop money from going out of the bathtub, you turn up the spigot and have more money coming into the bathtub. So that's it, folks. Catch shot strategy and what we call the blue ocean strategy. That's a management term. In the red ocean, everybody's beating themselves up, fighting for the same thing, and there's blood in the water. That's where most traders live. We want to live over in the blue ocean where things are nice and calm and we just collect cash. So that's our selling strategy. The fighter plane there, we want to be like that fighter plane, accelerate off the desk. Less reliable, potential for huge gains, but also there's more risk. Either way, though, we're doing the opposite of what most people do. You don't want to be a loser. You definitely do not want to be a loser because it's your money and it's your precious capital. And you can have an edge. You have to have an edge. If you don't have an edge, you're going to lose. Like we talked about earlier, why is that woman smiling, the blackjack dealer? She's smiling because she knows that if you sit down at that table and play long enough, she will take all your money. So we want to be her. That's why Vegas, they're smart. Any casino, they put table limits on because they know the more you spin that wheel or the more you deal those cards, the better chance they have of taking your money. That's why they bring the drinks around. If they can keep you at that table, that's at their advantage. So that's us as option sellers. So you can sell options, you can buy options, you can do both, either one or both. You can diversify, and you overall just put the odds in your favor. So, and the key is, the bottom line key here is do what suits you, do what fits you. If it doesn't fit you, it's not something you understand, believe in, and can stick with, you don't have a chance. So why are you here? Figure it out. You want to build worth, net worth? Do you want monthly income, retirement income? What do you want to do? So, and then you can figure out where you fit into this matrix. You want to sell options for monthly income? You want to buy options for net worth? Do you want to try futures options? Figure it out. Who are you and who do you want to be when you grow up? So we do. We have new trades starting all the time. We send out an email. We have a Monday night members session. We learn a lot. We get entry points, exit points. We have an educational program. And we have a couple of daily newsletters. We've got a great writer who works for us. The Monday evening workshop, we learn a lot. I learn a lot. Everybody learns a lot. We're throwing in the VIX trader system I talked about earlier. We used to sell that for $8.95. Now we just give it away to you as a free benefit. And it's not just about VIX. There's a lot of trading things that are really great there. And so that used to sell, I mentioned $8.95. We're just throwing that in as a value add. And what's coming? We got new content coming, new trainings coming. We're already doing coaching, which is people find very valuable. We're looking at the futures trading, like I said, and I don't know if that's going to work for us or not. And of course, prices are going up. Everything goes up, right? So here's the deal. Starting this afternoon, we're going to have a webinar sale that's going to go until Sunday night at 10 o'clock. And it's a $600 one-time subscription. That's the last time this will be available. It ends on Sunday night at 10 o'clock. It gets you an hour of free training consultation. It's a 30-day test drive. You get a free guarantee. And I can't guarantee you're going to make money, but I can guarantee you're going to be a happy client. We've been with the Better Business Bureau since 2007, A+ rating, and I'm proud to say we have had 0 customer complaints, 0 in 14 years. So that, I think, wraps this up, David. We got one last slide. There we are, $600 guaranteed. And David, if you want to put in the chat box, let's figure out how to, so they can get a hold of us. Because if you just register today, you'll be in the queue and in the lineup for the sale. I'll give it back to you, David.